So of course tomorrow is option expiration, so the behavior of the stock market and the underlying stocks, the price actions will be completely different than that of the regular days of tradings, and therefore you have to incorporate different strategies for option expirations, especially when there's not much news influencing the behaviors. There shouldn't be any news or factors for tomorrow options, unlike last Friday where Trump announced he had COVID, which pretty much put a monkey wrench in the whole behavior of what Friday for last week was gonna be. This week is, of course, no such behavior after the market. Already they are gapping it up, and the reason they are gapping it up is you can see right here. So the 3200 puts on Amazon essentially have very low volume compared to the 3200 on the calls, so therefore they're gapping it up because they're trying to front run, trying to get those options on the 3200 to be a little bit higher, probably trying to push it for tomorrow, see if any option players, any programs would buy in on the push tomorrow. So they are going to attempt a push. So my prediction tomorrow obviously is going to be a gap up. How big the gap, I'm not exactly sure, but let's just assume it's just a nice decent gap up. Now I'm assuming they're going to try the initial push up. The reason they're going to try an initial push up is because they want to entice the programs. They want to entice the buyers and the shorts to essentially just to get squeezed as much as possible, attempting any type of squeeze tomorrow. Program buying would bring the options player, the calls on the 3200s as high as possible for them to exit. Not sure if it's gonna continue or not, but I'm assuming it's gonna peter out. I just don't see how they can get enough buyers to sustain a rally because eventually the shorts are gonna get tired or get fed up with this price action, and they're gonna try to engineer a reversal, and it might be a big reversal before some type of counter rally, and it could be. Now, this is a possible scenario. I don't think this scenario will happen, but this is what the the shorts want. Essentially, any potential push opportunity tomorrow that fail this level, anything that fail this level will have substantial repercussions to the longs because the shorts are going to start pounding in, the programs are going to start reversing it the other way, and you're going to have a pretty nice solid reversal. So my play probably tomorrow. The safest play is to sell the 30 to 3200 puts. I should have sold it at the close today, but I wasn't even thinking about Friday maneuver. However, I may sell that at the beginning just to. I'm thinking they're gonna try to engineer a push, depending on how big the gap is. Let's see if the gap is too big. If you get a gap that's all the way up here, the price target, they might sell that off right away before any attempt to push. So that would be a better scenario for the push. Would be a high gap up, a big gap up above price target, maybe even to above this level, maybe testing the high right here. Any gap up of this at this point would indicate the trend to be up because a big gap up normally indicate the trend to be up because the yellow line would be all the way up here, even though you don't connect the dot. um, but when the 5-day moving average would probably be right here, and eventually it will catch up to the price movement of the candles, and that's most likely the scenario if there is any type of huge gap up. Now, if it's not a huge gap up, Then if it's a small gap up, I'm assuming they're gonna try to push it, and they're probably gonna fail out. And I don't know if it's gonna go this way or it's just gonna do something like that. Most likely that is the scenario, and this won't be the scenario. The other thing I would be looking at is the options. The price action on the options would be pretty nice. Here, let's assume, watching this guy, the volume on both this, I don't think the volumes on the puts are gonna be high. Who knows? If they sustain, if they're able to get any puts, any negative news or any catalyst or any an ability to scale out the longs. If they're able to engineer a successful push, then I mean a successful flush, then the puts are gonna start getting on some value, maybe toward the 550. Who knows? And the volume will be higher. But check this out. Look at this line. This is the 100-day. This is the 100-day exponential moving average, and look how that right here indicates the reason why there was a sell-off, or that is the top, right? This is actually, interestingly enough, this is the very top, and that's the catalyst for the top of the of this guy right here. So that was the reason why it petered out, was there was a price target for, at this point, right above 32 something right here. If I were to watch this option right here, the 3200, yeah, the 3200 calls, and anticipate this 100 EMA on the 60-minute chart. The 60-minute, that would have shown me the reason that would be the catalyst for selling the puts or buying the puts, selling the calls. So perfect way to sell the calls. That would be about, I don't know what it was, like maybe 50, and that's 14. So I mean, I probably won't hold it for the entire day, but had I hold it for the entire day, that's a good 16,000. No, that's a good 3,600 right there. So nice profit if you were to sell the calls at this top where the 100 100 EMA meet up with the very high of the option for that data point in the morning, which indicate this is the top right here, and then that's the reversal. And of course, it closed at the low, well, not really the low, but the low on the option. It is the low for the day because it gapped up. So that's the anticipation for tomorrow. Strategies, I need to be careful of traps. They're gonna try to land traps every now and then. So any movement toward, like, the VWAP, that's probably gonna be traps, potential traps, any scenario. Just like last Friday's, there was a whole bunch of traps laid out. I did a video for that last Friday, which was on what was last Friday? That would be the 2nd of September. So here it is. Yeah, there's just a lot of traps. Look at that 100, the VWAP right here was a trap, and then they flush it all the way down. I mean, at the time, you probably wouldn't have, no one would have anticipate that, here's the initial bounce off of VWAP, and then it just flush it down. Here, this is a nice technical level. So the 100, I keep forgetting, the 100 EMA, the 100 moving average on the 5-minute has been a consistent technical line. If you watch through all of this, that this has been a consistent technical line for Amazon in October of this month. So consistent technical line for whatever reason. They are using the 100 EMA as a very nice, not only for the price action of the underlying stock, but also for the options. The options right here on the 60-minute, the 100 EMA is showing technical level, and look at that right here too. And of course, let me see, continue going on. This one they penetrated it, but that's okay. It's not always perfect. And here it is again, right there. When there's such imbalance, it's gonna go right to this 100 EMA, and that would have been a very nice profitable trade. So tomorrow I'm gonna anticipate technical lines. VWAP will may be traps, but the 100 is gonna set up for technical lines, and let's see how they behave. It's really gonna depend on the gap. Big gap up is gonna indicate a lot of strength, a lot of front running. Which would mean that the trend for the day will be higher, so that any sell off in the beginning can be bought uh, for the push and they're probably going to get control in the afternoon, especially with the big gap up. That means and the volumes on the options are going to be extremely high on this guy. It's going to be very high because most likely in the afternoon they're just going to try to push it as much as possible. That's if there's a high gap up. A low gap up might be a very dangerous scenario because a low gap up means that there's just not that much front running, and on the open, they may try to engineer a push, try to get the programs to get in, try to get the shorts to get squeezed, or any of the scare shorts to buy and support any type of push. But most likely, it's gonna peter out, and that is gonna be a dangerous scenario because petering out would be a lot of the longs we got starts getting scared, and you're gonna just hit stops. It's probably going to be pretty dangerous it's going to be probably a nice reversal before they catch it. And you're going to have to watch the candles because the manipulation candles you can actually see on the 5 minute and the 15-minute right on the transition from one candle to another. You can see the bid and the ask jump in favor of whatever direction they wanted. So if it's an upward direction, you can see from one transition of a candle to the next, right at the 5 minute, and even more so on the 15 minutes, you will see the bid will jump just right from the transition. So that's going to indicate what direction they want, whether it be up or down. You got to watch for the manipulation candles. And there's going to be potential breakout or flush, so that you're going to need to use contingency price, which are price targets set at strategical location where potentially at VWAP or 100 EMA, they're just gonna flush it or break right above it. And there's no way you can catch it on a manual maneuver. You can only catch those type of smack up or push up, or just type of wicked movement where they shoot it right up or smack it right down. The only way you can catch it is with price contingency, price targets, where you set a contingency at a specific price on key technical level like VWAP or 100 EMA. So that's the other thing is contingency, and be careful of traps. Don't chase. If you miss it, you miss it, because if you chase on option expiration, they are going to burn you. That's because they know they can see your shares, they can see your options, and they will move it the opposite, and just to get you to stop you out and to scare you out. Follow the trend if it's possible, may be difficult depending on the situation, but try as best to follow the trend and go small until it's time to go big on a perfect setup. Know that it's all manipulated. Watch the option volumes and the manipulations. um, so let's see what happened. The gap up is gonna be crucial for tomorrow, whether they're gonna gap up at price target or above price target, which would indicate very strong bullish condition for any reversal at that point. They're gonna push it, especially in the afternoon. They probably push it, even if they can't do much in the morning. Eventually, they'll get control in the afternoon and push it. Small gap up is a dangerous scenario, so that's more. Let's see how they do it. And that is the play for tomorrow, option expiration.